Peace family, Queen here. In this video, I want to bring two articles to your attention that you want to pay real close attention to. All right. If you are not at least one Bitcoin right now, while you're watching this video, you want to pay really close attention to what I'm about to share with you. All right. So now this first article that we're looking at from the Daily Hodl, $100 billion in deposits exit the U.S. banking system in 3 weeks as the Fed survey says banks face financial stability risk. This article was written October 27, right? Let's go through it. People and businesses are withdrawing billions of dollars in deposits from U.S. banks as a new survey details concern on the state of the financial sector. The latest numbers from the Federal Reserve Economic Data, the FRED system, show that deposits in all U.S. commercial banks suffered a $100 billion decline in 3 weeks, from $17.38 trillion on September 27 down to $17.28 trillion on October 18. The deposits flight comes amid a new survey from the Federal Reserve that polls 25 participants, including marketing professionals, academics, investment funds, and research and advisory firms. The participants say that while the sector may have withstood financial tremors earlier this year, banks are still at risk of another crisis for two key reasons. Quote, although survey respondents noted the banking sector has stabilized since the period of acute stress earlier this year, many highlighted risk of renewed deposits outflows given that large portions of deposits remain uninsured. Many respondents continue to link risk of reemerging banking sector stress to potential losses on CRE, commercial real estate exposures, particularly among smaller and regional banks. Participants also view that the commercial real estate sector as a potential trigger for systemic stress amid higher interest rates and declining demand for office space due to the shift to a hybrid work environment. Survey respondents viewed small and regional domestic banks as particularly vulnerable due to the higher concentration of CRE exposures, which could lead to tighter bank lending conditions. All right, so let's talk about this in layman's terms. All right. So if you remember earlier this year, right, there was a handful of regional banks that went under. What happened, data was leaked and the real financial records of these regional banks was put out there under public scrutiny. And there was a whole slew of banks, a lot of them in California, some other different regional banks. But what I'm here to tell you is with the data that was leaked, showing the real numbers, all regional banks across the United States is in systemic trouble. Every single one of them. Okay. Two things you need to know, right? If you're holding any funds in any bank over $250,000 US, there's something wrong with you. Number two, if you are holding any amount of money in any bank and it's not one of the top tier 5 banks in the United States, there's something wrong with you. Okay. Now I'm not talking about a couple $100 here, a couple $100 there in a little regional bank. Okay, that's fine. Right. But I'm talking about something substantial that would hurt you if that bank, if something happened, right? Catastrophic, where they put a freeze and you could no longer withdraw money as they did with these regional banks. Okay. So those are the first two things. All right. The second thing, or the third thing, right, is if you're holding any substantial amount of capital in a traditional bank, I would beg the question to you as to why. Why? When we are in the Bitcoin and crypto era, and you can literally exchange that fiat currency for, say, Bitcoin, which is my absolute favorite, right? You exchange that for Bitcoin. You hold the private keys to that Bitcoin. Bitcoin is an asset that's appreciating in price value, that's literally going to skyrocket here next year, probably to six figures, a high six figures, right? Why would you be holding capital in a traditional bank where that bank, you already know they're insolvent? They play trickery and different magic with the numbers that the public sees, right? But the Fed has now came out, right? This is not new. They've been knowing that these banks have financial systemic risk and they're financially unstable. They've been knowing this. They've been knowing this. How have they been knowing this? Well, you can go all the way back to 2008, right? You can go all the way back there. Okay. That's when when the covers were blown off the whole system. Okay. You can go back as early as the pandemic situation, right? Where all this money was injected, all this free money, right, was injected into the system. And these banks had money coming in droves, right? And then what did they do? They went and bought treasury bonds. And then what did the Fed do? They raised the interest rates and the banks went under overnight. It's by design. It was by design and it will continue to be by design. But what do you have to do as a smart steward of money? Okay. First of all, if you don't know about Bitcoin and crypto, you need to learn fast. You need to learn fast. Your government is not going to save you. Your financial planner is not going to save you. Your CPA is not going to save you. Most of those that I just named, they know absolutely diddly squat about Bitcoin or the cryptocurrency market as a whole. They're still selling old, outdated stocks, mutual funds, right? They're still touting this type of stuff to you. While the banks, right? The big boys, the big girls, the big banks, the top tier banks, they're quietly accumulating Bitcoin. Why are they quietly accumulating Bitcoin? But yet they'll shut your account down if you tell them you want to buy Bitcoin. They'll freeze your funds if you tell them you're in crypto. Why are they doing that? Why are they doing that? Because it's a game and they want to win. They realize that, number one, there's about to be a Bitcoin ETF. There's about to be a spot Bitcoin ETF. Let me tell you something. When that spot Bitcoin ETF hits the market, you see all this $100 billion that has exited the banking system. What do you think it's doing? It's sitting on the sidelines. It's waiting for a way to, here's the thing. Capital, money always seeks the hardest asset. Okay. Capital flows always seek the hardest asset. The hardest asset used to be pre-Bitcoin. It used to be gold, right? That was the hardest asset that we knew. Well, now, because there is Bitcoin, that is the hardest asset with a limited, fixed, finite supply. Understand what I'm saying, family? A fixed, finite supply. Okay. That means that there will be never more than 21 million Bitcoin ever in circulation. Ever. Ever, ever. Right? There's already 18 million in circulation. Okay. So there's only a handful of million more left. Now, what happens when you have all this this $100 billion right here by itself, right? Now, that's just $100 billion by itself is a huge, huge pile of capital, right? But what about all the bonds, right, that are out there across the world? I'm talking about the global addressable capital that Bitcoin could possibly take under its wings in its market capitalization, right? So you're talking about a global bond market of over 100 trillion. That's just a small portion of it. I've heard the number as high as 900 trillion, right? But just 100 trillion, you do the math. If only 1% of the global bonds that are out there that are getting negative yields, right? Believe it or not, people buy bonds and they lose money on it, right? But when you have a family office, or you have an institutional fund, large amounts of capital like that. See, they can play with the numbers and they can lose money and still make money, believe it or not, right? Believe it or not. So you've got this 100 billion right here that's sitting staring you in your face on the screen. Okay. You've got all these, global capital of bonds that are getting negative yields, right? And then you have, just the sheer fact of a spot ETF is on the pipeline getting ready to be approved into the marketplace, right? When that spot ETF gets approved to be in the marketplace, and people can allocate capital now to that spot ETF, because you have a whole lot of money sitting on the sidelines. It's called smart money, institutional money, that's sitting on the sideline because it doesn't have the proper rails to get into Bitcoin, right? They just can't, an institutional fund can't just go to like a Coinbase and just buy Bitcoin. They can't do it that way. It has to be done in the legal framework of that particular fund, right? So once this spot ETF gets approved, all right, now they have the rails to dump this large portion of their institutional capital into the spot ETF. They can do it within the parameters and the legalities of their fund, because the ETF is that type of entity that they needed. When that happens, you will see Bitcoin go parabolic down. What can you do as a small, individual investor, right? You literally, this is the first time in financial history that the small investor has had the opportunity to front run large institutional capital. Let me explain to you what I mean by front run. Okay. In the stock world, like if you're told about a stock, it's called insider trading, right? If you're told, hey, such and such company is about to, expand or whatever, and their price point's about to go up, and, you talk about it. That's how Martha Stewart, went to jail, right? So the whole insider trading thing with that regulated industry. Well, because Bitcoin, we are in it's a deregulated, it's a decentralized, it's an unregulated industry, right? We can talk about, hey, there's about to be a large amount of capital to come into this market, and you need to get in front of it, right? Think about it like this, right? Think about it just as an example, right? Bitcoin right now is trading at about 35,000 and some change, maybe 35,200, 300. Okay. Think about the fact of you getting in before the spot ETF, right, gets approved, before this $100 billion decides, okay, well, we've pulled all this money out of the bank. What are we going to do with it? Right? Money always seeks the hardest asset. The hardest asset on the planet right now is Bitcoin. Okay. So when that money decides to come into Bitcoin, when the spot Bitcoin ETF gets approved and all this other institutional capital decides to come into Bitcoin, what's going to happen, because it's a finite supply, it's a limited supply, it's a fixed supply. So when you have a huge demand for something that has a limited supply, it squeezes the asset and it makes the price shoot up to the moon. Okay. So your little 35,000, where you bought you one Bitcoin right now, right? That may 3x, 10x, 20x. I mean, at some point it will. But I'm talking about just as early as next year, right? We're slated. All the ducks are in a row, in my opinion, for us to see a 6-figure price point on Bitcoin. Perhaps a high 6-figure price on Bitcoin. Okay. So, I titled this video, why most people will never even own one Bitcoin, because most people are sitting around and they're waiting for somebody else to tell them, to give them permission to get into Bitcoin. If that's you, I'm giving you permission right now to get into Bitcoin, the same way that I was giving people permission when it was selling under $1,000 per coin. In fact, my close friends, my family, I was telling them when it was selling under $500, right? So you have my permission. Okay. You have my permission. Now let's look at this next article. All right. And then I'm not going to leave you high and dry. I have two solid programs that I think will assist you and help you to multiply your crypto holdings and multiply your Bitcoin as well, and leave, not debt to your children, but leave them some actual wealth. Okay. People are tired of being left with funeral bills and all your debt. Leave them something that they can brag on you about. That you were here when this whole explosion of Bitcoin was taking place, and you actually took action, and you didn't sit around with your head in the sand waiting for somebody on TV to go out and tell you, hey, now's the time to buy Bitcoin, when it's on TV, when it's convenient, when it's in your banking app, and people wait for convenience. People wait for convenience. Well, when it's so convenient, I'm not going to say it's going to be too late, but what I am going to say is that the larger amount of growth that you could have had for your portfolio, it's not going to be the same. It's not going to be the same, right? So let's look at this next article here. This is also Daily Hodl, and this is my boy, Arthur Hayes, Mr. 100X man. Love this brethren. All right, so this says here, he's talking about, this article we're going to be talking about the price explosion of Bitcoin, right? If you think, getting it under $500, or, everybody looks in hindsight and they say, oh man, I wish I would have gotten into Bitcoin when it was, pennies. I wish I would have gotten in when it was under $100. People are going to be saying, mark my words, people will be saying, I wish I would have gotten into Bitcoin when it was under $100,000. That's what people will be saying. Watch. But don't just watch. Take action while you're watching. Okay? All right, so let's look at this article. So 2,700% Bitcoin price explosion incoming, courtesy of One Catalyst BitMEX founder Arthur Hayes. BitMEX co-founder Arthur Hayes is doubling down on a prediction that the Bitcoin is destined to reach a seven-figure price. Hayes says that a monetary policy tool known as the yield curve control, the YCC, will act as a catalyst for Bitcoin to reach $1 million, a gain of around 2,738% from the current level. Central banks are the yield curve control to influence the long-term interest rate level by buying long-term bonds as much as possible to prevent the rate from rising above the intended target. According to Hayes, the entire United States government is enabling a loose monetary policy environment even as the Federal Reserve is tightening. Bitcoin is trading at 35,230 at the time of this writing. The BitMEX founder first predicted a seven-figure Bitcoin earlier this year in March in an essay. And at that time, he argued that China's loosening of its monetary policy would trigger Bitcoin to explode to $1 million. Hayes also says that the decision by the Federal Reserve mid this week to pause the hiking of interest rates suggests that it's time to pump financial assets. According to the BitMEX founder, the Fed's decision would trigger other central banks to ease monetary policy. And this is just giving you a snapshot of let's see what the date is on this. This is November 1st. Yeah, November 1st and November 2nd chart for BitMEX XBT USD, which is Bitcoin perpetual futures market. So, and this article was written November 3rd. Now, this is one guy I highly respect in the Bitcoin space. But there are countless others that are out there that very, very, very smart, smarter than myself, right? And the prediction that Arthur has is a lowball prediction, in my opinion, right? We've had predictions from Michael Saylor, British Hodl, a lot of Bitcoin maxis in the space. But here's the thing, all right? We know that for sure, we know that Bitcoin will exceed its all-time high, which was about 68,000 to 70,000 on some different exchanges around the world. So we know that it's going to surpass that. If you look at all the past happenings that Bitcoin has had, you will see that the trend is within about 4 to 6 months after the happening is when the real bull run starts for Bitcoin. So the next happening is coming up about April-ish. I don't know the exact date. It's at a specific block of the Bitcoin mining. It's at a specific block, and I don't remember that right off the top of my head. But it's sometime in April. The next Bitcoin happening will happen. What is a Bitcoin happening? Well, what that is this. Right now, Bitcoin mines a block every 10 minutes. And right now, what's produced out of that block every 10 minutes, whatever Bitcoin miner solves that block, there's 6.25 Bitcoins released to that miner. Okay. Well, when it happens come April of 2024, that's going to go in half. So it'll be half of the 6.25. Yeah, it's going to be half of that. Right. So what it's doing is reducing the supply, right? But the demand at the same time is increasing because there's 100 billions that just, pull their money out of the banking system, right? Because the Fed finally told the truth, right? You have all of this large institutional capital. They're looking for a way or a place to deploy that capital they don't even want to make money. They just don't want to lose money. So they want to preserve their purchasing power. What's the best asset to preserve your purchasing power on the planet is Bitcoin, right? So you've got all of that capital sitting and waiting. And then you have all of this addressable capital from the global bond market. It's absolutely insane. We're going to wake up one day. We're going to go to bed one night. Bitcoin's going to be one price. We're going to wake up the next morning and that price will be double. Overnight, that price will be double. And I'm here for it. I am here for it, right? So what I'm here to tell you, family, you're on my channel, you're a subscriber, watch my videos or whatever. Do your studies. Do your studies, right? And do the needful, right? Do the needful. Right? Act. Don't sit around. So many people tell me all the time, oh, I wish I would have listened to you, when it was under $1,000. Okay, listen to me now. But don't just listen to me, take action. Okay? Take action. You don't create wealth by sitting around just listening. You create wealth by taking action, right? There's 2 programs that I have. I'm going to put them in the description of this video. 2 solid programs that I have that will help you, that I believe strongly in, that I resonate with, that will help you multiply your crypto, right? Stack your USDT. And then I'm teaching my folks a strategy to now flip that into Bitcoin and hold it for the long term. There's 2 programs in the description of the video. Check them out. Do all your due diligence that you need to do and take action. Stop sitting on the sidelines, waiting. You're going to be sitting on the sidelines waiting with all of this information that's available right at your fingertips. It's ridiculous. It's ridiculous. Okay. Obviously, I'm not giving you any financial advice, right? Just one friend to the next telling you, this is what I'm doing. This is what I think you may want to do, right? Why would you be holding large amounts of capital in a traditional bank that could freeze your account at the snap of a finger? It doesn't make sense. When you can hold all of your wealth on a USB stick, 12 words in your brain, like what are you doing? What are you doing? Come on into one of these programs. I'll teach you more. All right, that's it, family. Have a good one.